Well, good evening, ladies and gentlemen, and thank you for being with me today. And it's good morning to our friends on the east coast of Australia. Good afternoon across the ditch, and thank you, Terry. Oh, Terry, you're with us. My Superman, Terry Knight, who runs the website for us and does all sorts of other things, and he's even here today, although he's a long way away. He's in Canada, and delighted to have you with us, Terry. Okay, so folks, this is a bit of an extra webinar. It's a bit more than we normally do, and oh, look at this, a lot of people here. Florian, glad to have you with us. Florian's back. He was a member years ago. He's back with us now. George Tarr's with us. Gregory Collins with us. Yeah, I see that. Yeah, the other Greg, Greg from Texas and Colorado Springs is with us. He's a wealth fund manager and a very keen trader. Greg Palladini, of course, is with us from California. He's also a super trader and a wealth fund manager, one of our very, very best traders. Jim's with us. Oh, I'm surprised so many turned up here. It's nice to see you all. Plenty of Jim. Joe's with us. Leo up in Canada as well. Good to have you with us. He's a tutorial guy. Mark Lutz, of course, wouldn't be a Danielcode function without Mark. Thank you for being with us. I'll give you a call next week, Mark. I'd like to interview you to talk about your trading and share your things you've learned about Danielcode with our clients. And I'll send you an email about that. Mike's with us, new Mike. Peter Mack, who's not a day trader, the other Peter, so a couple of Richards there. Sean, I know he's down in Adelaide. Good to see you with us, my friend. And Vicky's with us as well, which is even better. Glad to have you with us. So, probably a bit more to talk about today than you might have gathered, but let's move along. Here we are. Okay, so I show you this slide at the beginning of most of our webinars. Markets are rational, orderly, and sometimes predictable. And I know for a lot of you, you haven't found markets that way. You found them irrational and frightening and scary, and they're not. Truly, once you know how to trade, markets are your friend, and markets are there for your benefit. That's what they're there for. And remember, the business of trading is not about being right. The business of trading is making money. In a lot of these webinars, I talk to you about how accurate and how specific and amazing the Danielcode is. And that, of course, is the reason why it's so good at making money. I honestly can put my hand on my heart and say that the Danielcode trading systems are the best I've ever seen, the best I've ever heard of. And those of you who've been with us for a while and follow along with our webinars, you'll have heard comments from chaps who've, and ladies, of course, who've done their tutorial webinar and the amazing results that they get. And truly, it's all quite extraordinary. And I want to make sure today that you are aware of everything that's on offer at the Danielcode website, particularly for new people. You're most welcome. And have a look at this. Some days are bluebirds, aren't they? What an amazing run. Canadian dollar and the Swiss franc, the chief, have had extraordinary 3,000 and something dollars, and the buy signal's been elected today. That run's actually ended today. But $3,000 per one contract, that is great trading. And it's here's another one. So some days are gold, bluebirds, and other days are gold. This is our gold trade for the last little period of time. You can see it's all run by our T.03 and success signals and T.03 plus signals. I'm going to show you exactly what those are. It can get a little bit confusing, I know, but have a look at this for some nice trading. $10,500 on the sell signal, straight into a T.03 and 6S buy signal, which was elected. $15,000 straight up. You might not have got that because the last bar gapped up, the one that's the high, and I know we've got an up bar today as well for our T.03 plus buy signal. But what we had there is we had a market really seriously overbought with a gap, and that doesn't happen too often. Usually the gaps will come towards the beginning of the run. You can see, in fact, from the low here, the key reversal bar and an outside bar on the low, the very next bar there is a gap up. That's typically where you see gaps, maybe 4 or 5 bars later, when they get some real momentum. To have a gap up when the market has been overbought for a considerable time is unusual. So I got out on the close of that bar, and we had a T.03 sell signal the next day, which was elected. So it was probably about 14,100, I think, if you didn't exit on that close, but you got out on the sell signal the next day. Still perfect, wonderful, very, very nice. How often do you get $24,000, $25,000 per one contract in 2 consecutive trades in gold? It's absolutely fabulous. And as I posted on the website, any time you get 2 or 3 times margin that you can bank that into your account, that's good trading. That's seriously good trading. And have a look how specific these markets are in finding these blue lines and their red lines. It's quite extraordinary and very wonderful. Okay, so markets are your friend. They exist to give you health, wealth, and happiness. And you think I'm kidding about that, but I'm not. You're either trained or untrained. And once you're trained by the Daniel Code, your view of markets will be to embrace them because they're there for your benefit. That's what they're there for, and they are quite extraordinarily generous in the way they reward you. So I want to tell you a little story about the origins of this amazing thing we call Danielcode. And it starts probably well before 2000. I used to trade stocks when my father was alive. He was a great man for the stocks, but he'd been long gone at that time, and probably 95, something like that, I'd started trading futures. And being an attorney, I assumed you could learn all about trading futures and Forex from books, lectures, and some practical experience. And it turned out that idea was incorrect. You can't. And I know there's a whole lot of you who are trying to learn to trade from the internet. You can't. And the problem is that what you'll get on the internet will harm you. As far as I know, because I went through the whole process myself, and I'm an avid follower of anything new and exciting, there is nothing out there. It's the Daniel Code or do your best. Now, having made that statement, let me qualify it by saying the Daniel Code is the best trading system of its type. And what it is, a daily system for trading daily bars in futures and Forex. And it is a program that has very specific risk parameters. And to qualify it or classify it with other programs, you need to have that in mind. There are some programs around that look very good, but the risk on them, Greg Palantini knows all about this. The risk profile on some of these programs would scare you to pieces. So what was happening in about 2000? I'd done Elliott Wave, I'd done Gann, I'd done most of the leading teachers, the gurus, you name them. I've probably done their course because I spent a number of years and a not inconsiderable amount of money trying to learn these various trading ideas. And with GAN in particular, I was a GAN fan for years and years, and I had so many of those very, very expensive GAN trading courses and GAN charts, and I think the name was Joanne from Lambert GAN. I must have been her all-time favourite client. But more than that, I had a lass in London and another one in San Francisco who were finding me some original, supposedly, put a big set of inverted commas around how original any of this was, but I'm talking about original GAN charts, letters, particularly from Safariel, who was that's the pseudonym for Walter Gorn Old, who was GAN's mentor. And if you think you know something about GAN, learn about Safariel. You still won't have a trading system at the end of it, but you'll have a lot of interesting things, no doubt about that. Walter Gornell Safariel is he's been dead for many years now, of course, long time, but he's still famous in those circles, astrology. Which we do not use, just in case any of you think we do, we don't. And no, I'm not interested in Mars retrograde or any of that stuff. What we use are the things that are real and physical. So I got to the stage, I've been through Elliott Wave, I've been through GAN, I've been going to seminars in many in the States, Europe, London, and as an attorney, I'd assumed that was how you could learn, and it wasn't so. And I had this huge collection of GAN paraphernalia, courses, my goodness. I had so much stuff that when I finally understood the truth about GAN, I couldn't fit that stuff in my garage. I had to rent another garage just to store it all for a while until I got to the stage that I gave some bit away and burnt the rest. And I'd just returned from a $10,000 seminar in San Diego, and we were moving house at the time. As you do when you move house, you find all sorts of things that you've forgotten about. And what I found was my mother's old prayer book. And she'd been dead for many, many years at that stage, a wonderful woman. And she had converted to Catholicism late in life. We were Anglicans as a family, which pretty much C&E, you think it stands for Church of England. Well, it generally stands for Christmas and Easter when you turn up at church, particularly if you live in Sydney, the eastern suburbs, you turn up at St. Mark's, which is a very social and wonderful church. But when my mother had died, I put all the things away in a box, you know, glasses and prayer books and a rosary and a few other personal items as well. And when we were moving house, I found this box, which I hadn't thought of for years, as you don't. But I found her old prayer book, and it had a sticky tab in it, those yellow sticky tabs. And on it, it had written, "The answer is in Matthew or Daniel." And I had no idea what that meant. And I assumed she'd found something that resonated with her in either the book of Daniel or the book of the new Gospel of Matthew in the New Testament. And I got thinking about that, and for some reason or other, I thought it was really important for trading. Now, consider I'd done all these courses everywhere. I had a head full of everyone's ideas about trading, but it didn't work for me. I'm not to say that it didn't work for the proponents of it. Bob Prechter, for example, the Elliott Wave guy, who's taken a very simple concept and turned it into a roaring, raving monster. But there's no doubt Bob was a very, very good trader in his youth. No doubt about that at all. But I'd gone through all of that, and my equity curve was going up and down and up and down and up and down, which is what happens most of the time to people who are not properly trained. And I could never just get far enough ahead that I could say I had a constantly increasing equity curve. And at the time, I still had my law practice in Sydney, although I'd taken leave of absence for a lot of time because I was spending so much time on this trading. And it got to the stage, I said to my wife, I was spending so much time on this trading, I've got to either learn for myself what makes markets turn, or I have to give it up and spend more time doing the law in fairness to my partners. And it seemed to me that turns were the beginning and the end of everything in trading, because all trends start with a turn, and all trends end with a turn. So my great focus, for whatever reason, was on these idea of turns. And what I did is I sat at my computer with my head on my hands, and I stared at charts for 3 months. And I stared at charts for so long that I got bony spurs on my elbows, which got infected and eventually had to be removed surgically. It was a very unpleasant process. But gradually, some of these new ideas that came from the Danielcode came to my mind and became apparent. So Daniel's code is in fact a 15-line historic document from about 2500 BC. And it's all about time. That's what it is. And in discovering Daniel's code, this was the process that I went through. And being an attorney, I didn't trust words. I mean, if you consider that our law courts are absolutely chock-a-block, there's currently about a 3-year wait to get a commercial contract placed in the superior courts, get them heard. And that is just proof that even with the written word, different people can have totally different understandings of what it means. So that had been my life as a lawyer, that understanding. So I wasn't interested in anything that worked on words, but I was very interested in anything that worked on time, because time being expressed in numbers. And that's what I really was searching for and studying at enormous length. And we think about doing what I was doing, which was taking every number in the book of Daniel and the Gospel of Matthew and dissecting them down to the smallest fractal, square roots, cube root, all sorts of things. Whatever you can think of, I did it. And I was building all these sequences with numbers. And I had no computer skills, and I still don't. I was just that bit too old. I can remember I got my first computer when I was, probably 24, 25, something like that, as I recall, maybe a bit older. And I looked at that computer for 6 months, and it looked at me straight in the eye for the same 6 months, and nothing happened. Because it was one of those early MS-DOS Windows computers, and unless you knew the codes for all these MS-DOS commands, it was hopeless. And of course, don't forget, we didn't have Google in those days. You couldn't just type in, give me the MS-DOS commands. It wasn't there. Eventually, Windows, of course, came out with the first version of Windows where it had a pretty picture, and you could click on it and it would take you to the next step. And that was the start of me using a little bit of technology. But back in that day, I was putting all these numbers, handwriting them onto spreadsheets. And the spreadsheets I had were about half the size of your bedroom door. They're called A1 paper. They're huge. And you can rule it all up, and you can get in thousands and thousands of numbers and sequences and what have you. And eventually some of this stuff started to come out to me. And I was always very cognizant that if I was going to be taking numbers from a document that was written 2,500 years ago, and you can qualify that further by saying, and had a religious overtones to it. More than overtones, this is absolutely straight religion, verbatim out of the Bible. I had to be able to verify that those numbers meant more than just need of having a fantasy on numbers or liking to enjoying playing around with numbers. And when it got exciting for me is the first time that this number 29.6 appeared, which we call Danielcode time. 29.66 days is Danielcode time. It's our measurement of time. It's not the only measurement of time. There are many measurements, but that is the Danielcode measurement of time. And sometime considerably later, I found out that, in fact, 29.5 is the length of a synodic month. And you can read that up in Wikipedia or Encyclopedia Britannica, wherever you like. And what it actually is the synodic month is the average length of a calendar month. And it's calculated by the planetary alignment of the Earth, Moon, and Sun in a particular sequence to each other. And then time is counted as that sequence moves off, and it's counted up till the day it reappears. And the average of that is 29.55 days. And that itself is an average of each individual month. When I got right into it, we're looking at an individual month, and I'm saying, why have I got 29.6 and Wikipedia's got 29.5? And what I found out is that time varies. Remember, all of these things that are creating time are spherical objects in an orbit, but they're not completely spherical. And the orbit is not round, it's oval. And I then found out that time varies. This hour is not exactly the same as the last hour, and the next hour will not be exactly the same as this hour. And on a larger scale, I found a report from, I think it was NASA Jet Laboratories from memory, and it referred to the year 2001. And in that year, in this study, the synodic month had varied from 29.3 to 29.7. And the 29.55 was the average. So you can see either 29.5 or 29.6 fit quite easily and comfortably into that range. But that, excuse me, is only part of it. And once I'd got time as 29.6 days, and I knew that there was a whole lot of days missing. We have, 152 twice 104 days of weekends. We have another 12, or is it 13 now, market holidays. So there's 117 days in a year that are not on the chart. And that is about 32% of daily bars. So we should have a systemic error of at least that amount, and amazingly, we don't. And as this code started to come out, I saw it first of all on the gold chart, and then the S&P. And the dominant time cycles were 29.6, then 44, which is the time cycle for gold and works in other markets, then 59, 62, and 70. And 70 is a very special cycle. It's almost exclusively a time cycle and not a price target. For those of you who've read my article, The Other Way, and if you haven't read it, it's available at the Danielcode website, www.thedanielcode.com. If you're interested in time, you should read The Other Way. It's quite extraordinary. And 70 plays a very dominant part in those major time cycles, and we use the S&P to identify all of those. So once we can understand time, something marvelous happens. Have a look at this chart, and I know most of you have seen it before. This is gold for almost 3 years. It's about 2 years and 7 months, or 2 years and 8 months. As much as I could squeeze onto this chart before, it just goes blah, and you can't see anything. Have a look at this chart, and on the 29-day time cycles, our most basic time cycle, every important high and every important low has come at and exactly at the Danielcode time cycle on the 29-day cycle. It's quite extraordinary. I use this chart when I'm teaching you. Those of you who are planning on doing a tutorial or have done a tutorial, you certainly know it. I've had a few people, not a number, I'm going to think it's 3 people who have got to the stage of seeing this chart, and they've said, don't tell me another thing. This is everything I ever wanted in my life. Don't tell me another thing. Just tell me what the half cycle is, because you can see these don't all come in a sequence because it's such a big cycle, 29. You can have, 2 buys in a row, 2 sells in a row, and how you break that up is with a half cycle. But these guys, this is what they trade, and I've got one in particular, and he is a very senior executive at Switzerland's Reserve Bank in Zurich. And he just trades the 29 cycle. And you have to be emotionally able to do that. But he uses a 14 half cycle, and he does incredibly well. And as he said, he books a call occasionally. He said he's always happy to talk to me and anxious to hear what's new and exciting. But he said, I don't want to change what I'm doing. It's been my fantasy to have a program like this. So that's what time is about. You can see it's so dominant. Regrettably, there's a lot of stuff that's happened with time trading that's given it a bad name, and most of it is linked to astrology. Those of you who are understanding of Gann and Safarial will understand that a whole lot of that stuff is also based on astrology. Quite frankly, it doesn't work for what we do. It may work for other people. I don't want to be critical of anyone's beliefs, but it doesn't work if you're trading futures markets, I can assure you of that. So if you've been trying to trade futures markets with the astro cycles, give it up, learn the Daniel Code, and become an elite trader. But that is the magic of time and what it does. So we don't use astrology, absolutely, definitely nothing to do with it. However, we do use those planetary movements that affect tides. And if you go back through some of my previous webinars, and I know it's going to be hard to find, there are hundreds of them now, aren't there? The tidal movement is what it's so important. It's so dramatic. There are parts of, just North Queensland, near where I live, the tidal drop is 25 feet. And in the Bay of Fundy, I think it's called, I might have got that wrong, in Canada, it's bigger. It's huge, the tidal rise and fall. And what those massive tides are all about is the gravitational pull of the moon. And that gravitational pull that the moon exerts on the Earth is true. It's real. And once the ocean reaches the land, that gravitational pull continues across the face of the Earth. We call it air tides. And it's amazing, and it's measurable. I can tell you all of this because many years ago, I got a surveyor and asked him to give me the exact longitude and latitude down to seconds, hours, minutes, and seconds of the trading floor of the New York Stock Exchange. And of course, he couldn't get in with his paraphernalia and measuring tools and what have you. But he did give me the exact settings at the door, the main doorway into the New York stock market. After that, what I was doing is I was measuring or taking the time of the tides closest to Wall Street. It's called I'm going to say Barat or something like that, the nearest position. There are measuring stations everywhere, and the closest one there is pretty near the end of Wall Street. And I was timing these tides down to the second as they moved across the river and in over the exact position of the stock exchange, New York Stock Exchange trading floor. And it's amazing. If you want to be interested in trading short-term charts, which I don't do anymore, I did for years and years. I've traded everything you can possibly think of, including 3-tick charts, which are pretty hairy. But I was young and I didn't know any better. But the tidal flows are real, they're measurable, they're substantial, and you can take them all from that tide post or measuring station. Excuse me, and you can calculate the changes as you move through the various tidal sections. And for those of you who are Gann fans, I once saw a photograph of Mr. Gann in his office with this massive tidal machine, as big as a full-grown old-fashioned wardrobe, with dials all over it. And what it was I've recalled it now, it was the tidal movement it's called New York Battery. New York Battery is the tidal position that's closest to Wall Street. So that was all wonderful stuff, but we do use also apogees and perigees, and that is a physical phenomenon that the moon is orbiting around the Earth, and it goes on that orbit. It goes as far away as it is ever going to get. It turns around, it starts coming back on a elliptical orbit. And when the moon is at as far away as it's going to get on this rotation, that's called an apogee. And when it's as close to the Earth as it's ever going to get on this rotation, that's called a perigee. So if you just think about perigee for a moment, so you don't think I'm an absolute raving lunatic, as we know that the moon has a measurable and observable gravitational pull on the Earth. So as the moon is coming in from its apogee towards its perigee, which is the closest it's ever going to get to the Earth, the gravitational pull is increasing slightly. Increasing until it gets to that point where it's as close to the Earth as it's going to get, which is called the perigee. And from there on, as it moves away, its gravitational pull on the Earth is weakening slightly. And it keeps weakening all the way out until it gets to its next apogee, as far away as it's ever going to get, and it turns, and all that run out to the end of that elliptical orbit, the gravitational pull's been getting smaller, and now once it's turned at its apogee, it's coming back towards the Earth. It's getting stronger again. So those sort of things that are physical and measurable about our world that we live in, this marvelous, amazing world, yes, were of great interest to us. And themselves, the full moon and the new moon cycles subtly shift the moon's gravitational pull. Now, it's got nothing to do with, wow, it's a pretty looking moon up there. It's actually what's physically happening because of the positioning that creates the full moon and the new moon and the intermediate areas from that. And I know this is a bit hard to see, but strain your eyes, because if you don't believe that apogees and perigees affect markets, have a look at it. This is the S&P E-mini. Pretty well, just take a quick run through, quick glance. The vast majority of those highs have all come at either an apogee or a perigee. A is for apogee, P is for perigee. And what about the intermediates? You can learn about those as you go, but apogees and perigees, if you knew nothing else, you'd be a very good trader, much better than you are now, because they very much tend to beat market turns. On this particular chart, which is the S&P, they tend to be highs. On other charts, they tend to be lows. And the other cycles away from the apogees and perigees will give you the lows or very close to the lows on this chart. So if you're interested in that sort of stuff, go back through some of our earlier webinars. There's a whole lot that I've talked about on it. So when we were going through, I'm going through discovering all these amazing things with the Danielcode numbers. And eventually, this had been going on for 7 years. Excuse me, 7 years. And as a mad obsessive, probably 100 hours a week doing nothing else. And these numbers had started to come out for me, and they're numbers, they are time. That whole 15-line document that I referred to, the book of Daniel, chapter 12, it's about time. It's specifically about end times. So don't let that excite you. There's a simpler explanation for what we get from it. But we had all these time cycles, and I started putting them on charts, as you do. They're running up and down the page. They're vertical. And I can find all these highs and all these lows, and they're just working like a dream. And eventually I got the stage of saying, what happens? These numbers, just these ratios just appear so incredibly dominant. What happens if we take those ratios and put them on as price ratios? In other words, they're exactly the same ratios, 29, 44, 59, 62, etc. Don't do anything except simply put them on as price targets from the various lows and from the various highs. Have a look at this. This is a gold chart in 2015. This is the chart I use for teaching all the time. But you can see there that we had the big run down from May into the low there in end of July. And from there, you had 3 highs and 3 lows up into the October the 15th, 2015 high. And if you don't have to look too closely to work out that every single one of those highs and the lows came at what we call target recognition. And target recognition, when I got to the state of putting these ratios on as price, I said to myself, we're going to have to test if this works, or is this just a Needham fantasy playing around with numbers, or if you've been smoking some white powder or something else. But I said, before I do that, I want to know what the parameters are. It's no good doing something then saying, oh, gee, that looks about right. Oh, that looks interesting. That's hopeless. You've got to define what the parameters are for the test. And the parameters I came up with is I said, I want the market to find these numbers at the bar high or the low or the close. And I wanted to find these numbers with the variance of less than 0.1%. Not 1%, 1/10 of 1%, 0.1%. And you can see here, if you look along the bottom of this chart, you can see a little light blue diamond with the letter R in it. And that's rollover. This is the 057 continuous chart. And those are the rollover points. So as we work through this chart, and we're using this continuous chart to host the Danielcode time signals as price. They're exactly the same. They're the Danielcode time cycles, but they're put on in the horizontal plane, so they become price, and therefore they become what we call price targets. And no market will turn unless it's found target recognition. What we call target recognition, when these bars find these numbers, and they do it with incredible precision. Because the rule I set was, way back in those distant years, it had to be within 0.1%. not 1%, 1/10 of 1%. And you can see where those black diamonds are. They've all found those numbers within 0.1%. At the highs, you can see that we're using the high of May the 18th, which from memory was actually in the August 2015 contract. And there have been 2 more contract rollovers since then before you get to the October 2015 bar. And the variance on the upsides of those 3 upline are between 6 and 9 ticks. And as a number, you can see what this number is. It's 1400 up to a bit more. There it is. I've covered it up myself, 1527. 0.1% of that number or numbers around there is 11 ticks up there, all the way up to 15 ticks. We're getting target recognition 7 or 8, 9 ticks variance from the number. And why is that? Well, when we go to the other side of the chart and we start finding target recognition at the lows, and you can see the 2 of them are there with the black diamond on it, now we've got a variance of only 2, 3, or 4%. Why is that? Well, we've got 3 different contracts in this chart you're looking at, and we haven't adjusted for them at all. So when we're looking at creating a number in October 2015 on the Danielcode price cycles that we put on as time, that has to go all the way back to May 2015 for its base. It's working across 3 different contracts. When we get to finding these lows here, it's only working across 2 different contracts. So that consistent error is much, much smaller. But it's pretty amazing that you can take these numbers from May 2015 and it will still showing you exactly the highs all the way in October 15, 5 months later. And that's the price of looking at Danielcode. Time and price are the same thing on different axes. And this is the chart that proves it. Which is a strange thing. A lot of people can't sort of get that time and price are the same thing on different axes. Learn Danielcode and you will. Okay, moving on, I want to tell you about what we've got in the website and with Danielcode that will interest you. To start with, there's a lot of articles there. I used to write a lot of articles for Financial Sense, and these are some of them, and there's also some more recent ones as well. But I'll make an effort to find more articles. Financial Sense were very good to me. They were a fairly small business when I was starting Danielcode, and they were very happy for me to write for them, and I won their best article of the month regularly. And that worked until they got bigger and they got into some professional management. And for whatever reason, they didn't want me there. And one of the problems was that Danielcode is based on the Bible, and they didn't want anything that even suggested anything biblical or religious. And it's not. It's a historical document. Yes, it comes from the Bible. That's the only reason it's still available. That's the only reason it's been preserved, because it's part of the Old Testament. Otherwise, we would never see the light of day. But what we've actually done with that piece of writing is pure mathematics, and it's really simple mathematics. If you've got a $5 calculator, or you've got 5 fingers on each hand and 5 toes on each foot, you can do that level of math. It's very simple. And it's really just pure mathematics. And of course, what you're actually doing is that you are proving the fact that the author of this writing, which was Daniel, who lived at about 500 BC, the numbers he gave us roll out to be the length of a synodic month, and the other number we prove it with is the length of the calendar year, because those calculations bring us out to 365.37 days, which is the length of a calendar year, accurate to 2 hours over the whole year. 120 minutes over 2. That's how accurate it was. I went off to boarding school when I was 6 years old, and my parents got me a fob watch, which was the thing in the day. And this was a very special fob watch. It had luminous letters on it. So after lights out in school, you could tell what the time was. It was a source of endearing interest to me. But I can assure you that watch had to be wound. We had to wind it up before the days of electric clocks. And I can promise you it wasn't accurate to 2 hours a year. Amazing stuff. And you just got to think about all of that. Okay. The fourth seal, this is done by a gentleman called Frank D.B. He's a student of mine. He was a student. He's now the master. He came to me to a tutorial in Taupo, New Zealand in 2011. And he had his fiancée with him. He was a very young man then. And he said, I've never seen a financial chart. I don't read financial papers, but I love the way you write. He used to read my articles a lot. And he said, would you teach me how to trade? And that's how he came to me. And that was the first year I'd actually taught the fourth seal. And he locked onto it. He became obsessive with it and did years and years of work on it. And he's very, very good. And that's why he does it for us now. And he produces the fourth seal commentary and charts on S&P, crude oil, and gold every week, Monday. And you can see he's putting on the time cycles there. You can see this is the 6-day chart. He often uses a 24-day chart as well. And he gives you his commentary for the week. And I know that's a bit hard to read. So you can see here, this is what he had to say about gold over that period, which was up to this week. This was posted on Monday. Wonderful stuff. If you're interested in any of those three markets, you should get the fourth seal commentary. It's all available for you. Moving on, of course, our webinars. We do a webinar every second week or every fortnight for Greg from Texas's son. He knows what a fortnight is. It's not an American expression, apparently, but it means 14 days or 14 nights, which is 2 weeks. And we do these webinars, and they're all on YouTube as well. And our YouTube channel is /Daniel. They're also all posted on the website. Terry's been doing a wonderful job posting them by year, as you can see here. It's absolutely wonderful work that he's done. Okay, what else do we do? This one you won't know about. This is very, very new and novel. This is a Super 6 chart. We use the, I told you, I should say, that the 29.6 is the time. It's the measurement of time in days. But when we're observing and discovering the Daniel code, we also get a number for minor time, which is 6.21. And if you want to know more about that, have a look at the webinar that's called Correcting GAN. And GAN would like to say, if you are worthy, I will give you the number. And if you are worthy, which meant spending considerable money buying his courses, etc., he'd tell you the number is 7, which is not. That's wrong. The vibration for all markets is 6.21, and because of the massive, almost 30% discrepancy, 32%, I should say, almost 33% discrepancy in available days, you can just drop the what's after the decimal. The systemic error is greater than that. So we run 6-day charts, 12-day charts, 24-day charts. This is the 6-day chart. It's quite unique. It's quite different. And if you are subscribed to our Danielcode website super package, that's the $4.99 a month package, these members charts in S&P, gold, crude oil, and T-bonds are available to you. And they're quite unlike anything you've seen before. And they're very, very accurate. Have a look at this one and the next one after it. They're incredible stuff. For the time being, until Terry gets these incorporated into the website, just email me, jneedham@thedanielcode.com, and if you are subscribed to that program and you're interested in the Super 6 charts, I'll be happy to email them to you on a Wednesday night and on the weekend when they're updated. Okay, here's another one. Have a look at this. This is the gold. This is the Super 6 chart in gold. Look how accurate it is. Target recognition on the 6-day chart. Shouldn't happen, should it? But it does all the time. And that's one of the most amazing things, as I say, the miracle of Danielcode. As well as that, we do members charts prolifically. We cover 9 Forex, and I can say 11, now 12. We've added natural gas, incidentally, folks. We've added coverage of natural gas in the members charts, and that's so recent that it has not even been posted until today. I must put a post up for you about that, and that's thanks to Greg Palladini, who wanted to trade natural gas and wanted the members charts. And we're doing that now. Have a look how accurate these things are. These are your Danielcode time cycles expressed as price. Look what they do to markets. That's today. Look where the low was on the S&P. Incredible, isn't it? And did that happen all the time? Yep, all the time, all the time. This is natural gas today. Bounced off a T.03. It says a T.03 buy signal. That was a T.03 buy signal from the day before, carries forward. These T.03 signals are valid for 2 days. Our blue line signals are valid for 3 days. And our T.03 plus signals, the ones that are returning to the trend, we expect them to be elected on the day they're posted. But often a day after that, so they're worth writing them down anyway. And you'll see as we move on, all of these things are captured and covered in the Danielcode trade program. Here's NASDAQ correlations. It is so highly correlated with all the equities. Russell, NASDAQ, S&P, Dow, and Germany's DAX are so highly correlated that a signal in any one can be executed in any other, provided the trade is elected. Have a look at this. T.03 sells signal up at the high, down it goes. It actually finds a blue line under there, which is no longer on this chart. Bounces off it 1 day up, fails, and gets a flip me signal. These Danielcode signals are so powerful that if you have a valid time signal or a valid price signal, which includes a little bit of time, T.03s and T.03 plus do have elements of time in them, not a lot, but enough to make them wonderful. They also have their failure point. If that failure point is hit within 3 days after the trade is elected, that's a flip me signal, and you must stop and reverse. And it's very, very worthwhile, I assure you. Probably the safest bit of trading that we do. And Terry, of course, you're here. I'll talk to you again on the weekend. We've got to get this flip me into the website somehow or other. Did you like that, folks? If you did, Danielcode Trading Tutorial, there's the address. I will be happy to teach you all of this and more. Let's run through what we actually got here. We've got our T.03 trade signals. They've got their golden button on the website. Press that and it will show you what the T.03 signals are for today. And T.03 signals are all turn signals. Next to them, we have our T.03 plus signals, which repeats the daily T.03 signals but adds in a whole lot of other signals here. They're shown under daily buys, daily sell, as continuation signals. That's the T.03 plus signals. And then you have the success trade signal. Success trading is a method of keeping you in the market all the time, every day, all the time. And we trade crude oil, gold, natural gas, the Russell, S&P 500, soybeans, T-bonds, and wheat on the success program. And it's pretty sensational. To pull all this stuff together, once you've found what your signals are, go to the trade program. Just type in your account value, whatever your risk is you want to use, and it'll punch this up. This is today's trade program. And you can see it's got a lot more signals here than it had on the T.03 Plus list. And that's because this program carries forward other signals from previous days if they're still valid. So it carries those forward. It tells you what they are, either Aussie, JPY, that's, we cover Forex and futures, of course. It will tell you what the item is. It tells you what the signal is, a buy or a sell. It tells you exactly the point at which to put your order. We don't, when we get a buy or a sell, we don't jump in and execute it. We say if the market agrees with our analysis, it will go to this number. And if it goes to that number, we're in the trade and we say the trade has been elected. So our trade program here tells you the exact number for your entry, whether it's a buy or a sell. It tells you where your provisional stop, your first stop loss goes. It gives you a stop loss and exit protocol, which you can read about on the website. And most importantly, it tells you if these trades are correlated or not. So if you've got trades that are correlated, have a look here. We've got 3 of the Forex trades have got the Japanese yen in them. 3 of them have, 4 of them, in fact, 5, got the US dollar in them. Those trades are correlated directionally. The Japanese yens with the Japanese yens, the US dollars with the US dollars. You can only trade one of those markets because they're all going to be directionally very, very similar. Okay? Talk to you more about that another day. Trade technique, important. Simplest exit for T.03 and T.03 Plus signals are exit on the first profitable close or the first profitable open. They're much the same. And when you're comfortable that you can find the current trends, you can hold these trades much longer. But T.03 trades are by definition reversals. T.03 Plus signals repeat the current T.03 turn signals and add some continuation signals. But you need to learn and understand trade technique for inside bars, outside bars, and the flip me signals. And the flip me trades are the most consistent as they are returning to the dominant trend. So trading time, element of time signals in our T.03, T.03 Plus, and much, much more in our success signals. And creating and trading time signals is reserved for Danielcode tutorial clients. See our recent webinars, lots of talking about time signals. I don't tell you what creating and trading time signals will return, but we do have tutorial graduates telling us about making 100% on their account in a month. Then 80%, you remember this was, what's his name? I'm trying to remember, up in North Canada. He's our farmer, he's on the land up in Canada, really cold country. He made 600% in a year. And if you go to the recent Welcome to the Every Bar webinar video, which is on our website, you'll see a couple of our current tutorial students, Scott and Amy, telling you exactly what they're learning and what their returns are coming through on their paper trading, which is what I get you to do once you've got through your tutorial. Danielcode, learn to trade. We trade futures, Forex. You can also use this stuff on stocks. It's uncannily good. I don't understand myself why anyone would waste their time trading stocks when you've got futures contracts, but it works just the same. All markets work exactly the same on Danielcode. And there's your link to the Danielcode Learn to Trade document. Do read it, and if you're interested, let me know. And there's the link right there to the curriculum. And these quotes here are from Greg Palladini, who's with us today, as I said, a master trader and a wealth fund manager. And he was so kind that when he came back and did his second tutorial to learn about trading time, he said, I'll write all of this up under forum, the link at the website. Click on the link that says forum, then find the link that says Danielcode Trading Tutorial, or words to that effect, and you can see Greg's posted everything that he was doing and learning, and has been a huge help to so many people, Greg, for which we're so very grateful. Okay, today's special offer, folks. Danielcode trading tutorial fee is usually $7,500, which is unchanged since 2004. I should be putting that up, shouldn't I? But I haven't. And if you are able to start your tutorial before 11th November, I will give you a discount of $1,000. So special offer for this tutorial is $6,500. And if you know how to trade, I'll make you better. If you're a complete novice, never seen a chart in your life, I'll make you an elite trader. So correlations, finally, just to wrap this up pretty quickly. Some markets are directionally correlated with other markets, and equities in particular. Dow, S&P, NASDAQ, Russell, and Germany's DAX, highly correlated with each other. Forex can be highly correlated. US dollar index and gold are inversely correlated for very long periods. What I mean by inversely correlated is gold up, DX dollar down, dollar up, gold down. And I'm going to show you that relationship. We're also privileged to be in one of those situations where that relationship is breaking down. And I have written an article about that. And I'm thinking 2009, 2008, possibly. I went back and looked at every situation, every occurrence when that inverse relationship broke down, and it's always benefited gold when it breaks down, which is an interesting fact. You can see on this chart here, that's gold on the top panel, and that's the US dollar index running along in the bottom panel, and you can see where I put the arrows, DX up and gold up. That is where the correlation broke down. We've been long for 3 days at that stage, and that's where the correlation broke down. Here's a bit more detail. You can see exactly we got DX and gold both up on the same day. That broke away this pattern of DX up, gold down. Well, we should have had DX down until this big lift up here, and that big bar that the arrow is pointing to, we should have had a down bar in gold. We didn't get it because the inverse correlation had broken. And when it breaks, remember it for next time, it always benefits gold. Okay, so let's move on. Here we are. Equities are directionally correlated. This is the NASDAQ on the top pane and S&P on the lower pane. Equities go up and down essentially together directionally. Doesn't mean they're the same. Some have much more volatility in them at various times than the other, but directionally they are very highly correlated. Okay, some housekeeping, folks. Think about gaps up and gaps down. Remember, we are always trading true highs and true lows, and true highs and true lows account for gaps. And the rule says if the chart high today is less than the previous day's close, then the true high today is yesterday's close. And if the chart low today is greater than yesterday's close, then the true low today is yesterday's close. Just get your head around that because it's important. And if you like that, folks, I can teach you how to do it, all of it. And these are some charts that are not current. These are off 2 weeks ago, I think, or a week ago. I just want to show you this idea of target recognition. Look how specifically and accurately these charts find these blue and red lines. And it's extraordinary. On the high or the low or the close. All markets, that was a Forex market, this is the Russell. Big bar down, big volatility. Where does it stop? Exactly, almost to the tick at the blue line. This is soybeans in its last recent rally up there. Nice trading, exactly at the blue line. Same here, this is UST bonds. We've been riding this thing both ways for a long time. So that's going to be it, folks. If you're interested in taking the Danielcode trading tutorial, where I'll teach you everything worth knowing about safely and profitably trading futures and Forex, email me, please, jneedham@thedanielcode.com. And This is from Greg Palladini. Time signals work very nicely on Bitcoin, including the latest big move. Well done, but well done to you, Greg. The wonderful stuff. Yep, all markets are ruled by the Danielcode ratios. Or if you'd like to have a chat about your trading, if you're considering doing a tutorial, my Skype is jneedham2, and I've put down some rough approximate hours there. This is the chart archives on our website, folks, and Terry's got them all listed by year. There's over 40,000 members charts in there, all of which are prepared by hand. Do have a look at them, because you will find it is almost impossible to find a market that has ever turned anywhere other than at the Danielcode target recognition, which incidentally can last for 2 or 3 days. It doesn't have to be the final bar. Once you have target recognition, it's valid for 2 days, sometimes 3 days. If you haven't already, folks, help yourself to a free trial. Go to www.thedanielcode.com. Just hit the register button. If you have any issues with that, contact Terry, please. He's at support@thedanielcode.com, and he will enable things for you. Finally, here's our disclaimer, which we're obliged to show you, and I always want to show you, because I can tell you it's very, very easy to lose your money very fast if you're not trained and know what you're doing. By the same token, it's very easy to make a whole lot of money equally fast once you are trained and do know what you're doing. So that's me for today, folks. Thank you for being with me. I know we've gone a bit over time, but I had a lot of stuff to tell you. And Greg, good luck with your Bitcoin trading. That looks like something pretty fantastic. I know I've actually done a webinar on that, and I did a big program on Bitcoin and Ether, and they just love the Danielcode. Okay, that's it for today, folks. Enjoy yourselves. I look forward to talking to you next week when I'll be doing our normal Danielcode webinar. In the meantime, if you're interested in doing a tutorial, do let me know. If you would like to have your the 6-day charts, get subscribed to the Danielcode website Super, then shoot me an email. All the details are here, and let me know you'd like to have those Super 6 charts, which I will send to you on the weekend and on Wednesdays. And that's it for now. Thank you for being with me. It's always a pleasure to see my old friends here, and I enjoy you very much. And that's just for today. Bye-bye for now.